I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week, and always fun things in the middle. This is a week that the markets did start out on the slow side, and then things did start to pick up. Everybody was waiting for Janet Yellen to give a speech on the economy on Tuesday, and then once the speech happened, things did start to move. Seems that always happens. The Fed heads were out. They were out talking hawkishly. They were, as many of them that could get out there, were talking about interest rates going up this year, counter to what the rest of the world is doing. And then on Tuesday, Janet Yellen came out and she pushed back hard on essentially her cohorts there in the Fed, saying, not so much. That's not likely to happen. And when that happened, of course, lots of things started to move. Stock market actually launched its way on the upside. I'll show you that on the chart in just a moment. After that, well, we got some chop on the downside for a couple days, and then Friday morning, as some news came out of a big drop in oil and European markets down pretty hard, the ISM came out, and that seemed to be a trigger for what happens consistently now, and that is as the markets go down, buyers come in, and we got a strong reversal to the upside again on Friday morning. So that really tells the story of a choppy week in a market that is incredibly resilient. Buyers just continually coming in. Oil, that was a very weak market this entire week. It had a moment where it popped to the upside, the same thing that gold did after the Yellen speech, but then they both weakened. Oil ended up down $2 on the week and more, and the gold market, which got over a $20 spike on the upside on Yellen comments, then moved back and gave up most of that gain, still up just a little bit on the week. That's all, of course, because of a weaker U.S. dollar. And when Yellen talked about interest rates not going up so fast, then the dollar got sold very hard. We've been very negative on the dollar, and that's really in line with what our thinking has been. So gold had that pop, it couldn't hold. Oil had a pop, it could not hold. And when you look at silver, that's one of the weakest patterns of all, at least on the short term. It gave up what was a pretty good positive pattern and then has turned to the downside. We believed that precious metals were entering into a corrective phase, and that is what we are seeing here. Bond market, well, it's chopped its way up. In other words, interest rates coming down for the third week in a row, and that is certainly being affected by Janet Yellen's dovish comments. But on top of that, our patterns have suggested, as we looked at our charts, that the bond market was ready for this up move, and there still likely is more of that to come. We'll talk about that when we look at the charts later on. Let's take a look at our 60-minute chart of the S&P 500, the ES 24-hour chart, and get a sense for what moved the markets during the week. It's always good to look at that because this is all knowledge gathering, so we understand what might happen as we look forward. So here is that 60-minute chart of the S&P 500. Note on the gray areas, that's the overnight trading, and the white area is the trading during the day. So we had a kind of a overnight attempted rally, you can see here on Monday, but then the markets gave it up. European markets were closed, so it was kind of a slow period there, but China base book came out extraordinarily weak. China capex really slows down, and that had the markets concerned. Consumer spending also very, very weak, and that brought analysts modest downgrades to the GDP. And the market, which tried to open on the weak side in here, then got a rally. But then news came out of a shooting at the Capitol. See that right there? And then the market moved down again after that and couldn't really get its footing. So overnight on Tuesday, everybody was waiting for Yellen to speak. You could see we had a little bit of an uptick going on in there. And then after that, we got a down move overnight, waiting for this commentary to see how it sorted out in the market. Yellen, very, very dovish when she came out and spoke about the markets. Concerned about China, concerned about oil being weak. She's concerned about things that really she shouldn't even be looking at, because that isn't the job of the Fed. And the Fed has essentially taken control of the economy like world banks have. So I get pissed at that, and I keep mentioning it every time I can. I sure hope they elect somebody that can change that and save our future. So she said that essentially that the markets lowered rates and did their work for them, so they could just essentially be on hold. The markets actually will do their work. And in this case, we have the markets creeping with interest rates creeping back to the downside. And that must mean that we have a slowing economy out there. And you got to wonder what this stock market is doing as it explodes to the upside without any concern about what potentially the bond market is saying. Fed Williams, he comes out and says he wants to stay on track and wants rates to be higher, but that's in the face of Janet Yellen, who apparently is the boss. Housing prices, they're up 5.7% year over year. Really, that has been pretty strong overall. On Wednesday, before we get on Wednesday, you can see what happened here on Tuesday during the day as the market launched its way on the upside after Janet Yellen spoke. On Wednesday overnight, you can see there was a lot of buying ongoing overnight. World markets, they were up like 1.5 to 2.7%, but Japan was down. And talking about more stimulus there, their economy is just in horrible shape. Yellen's dovishness brought this carryover buying. ADP came out up 200K. That's the private sector jobs, a little better than expected. And then the bond market, that moves down after the lift it got on Tuesday, and the bonds, though choppy, pretty much stayed consistently moving up on the week. Oil inventories is what really moved the market, though, on Wednesday. Right over here, it was a shocking 2.3 million barrels, and oil inventories are not going on the downside in here, and that has got the oil market really, really sloppy. But that doesn't even appear to be negatively affecting the stock market for any length of time whatsoever. The stocks got hit very hard in here and then rebounded, as you can see. Came Thursday, equity markets were mixed to lower. The Eurozone was down, and that being weighed on by weaker mining stocks. U.S. stocks, they had an early rally, as you can see here, and then failed as we get some correction coming after this monstrously big up move right there. And then everybody was waiting for the Friday jobs report. Friday jobs report, actually, payroll's up 215. The U3 is at 5%, a little notch to the upside, and U6 is at 9.7%, which is a much more realistic number. Saudis come out and they say, well, no freeze, not without Iran, and Iran says, we're not freezing our oil. We've been punished for too long, so that has oil moving to the downside pretty sharply again, over 3% on Friday, and the U.S. stock market did look sloppy. ISM comes out, and I don't know if that was any kind of a stimulus. It was stronger, but you wouldn't think it would move the market as much as we saw right over here. S&P 500 down double digits, then explodes, moves all the way up to plus $8 late in the day here as we speak, and that just shows you the strength of the market. Just massive buying in this stock market keeps coming in, and no denying that. It's pretty easy for people to say it's gone too far and it's come too fast, and the truth is that there's not any selling in here, and we're seeing these patterns trace out in a bullish way. We'll talk about that again in our short-term view coming up at the end of the show. So let's take a look at our economic calendar. It's a very light one coming up in the next week, as we are pre-earnings season right now, as we get into the first week of the new quarter. Remember that Alcoa will start it off in a little over a week, and then all of a sudden we'll get the floodgates open in a couple of weeks. So not quite yet. When we look at this calendar for the coming week of earnings and economic events, you can see that we have just a few earnings reports coming out. The ones that may be significant, Monsanto, that's a stock that I am on the long side of right now, so we'll be hoping, I hate that word hoping, but maybe the earnings will be good for us. And we have on Tuesday before the opening Darden and Walgreens, Walgreens Boots, that's the WBA. And then on Thursday we get ConAgra and CarMax and Schnitzer Steel. Those are all before the opening, no earnings after the close in our 330 stocks that we look at on a regular basis. Note the economic events. The big event is going to be on Wednesday. Tuesday, you could get, the ISM moved it today in the manufacturing index. This is the non-manufacturing index coming out. And then the big thing is the FOMC minutes on Wednesday at 2 p.m. Eastern, which is often a market mover. And we have seen that every time something comes out about the Fed, it seems like the market rallies. So why expect anything different? Well, eventually that'll end, but we're not going to count on it right now because, as I said, these patterns are positive. That is the opening segment for this week, and we'll be back with the best and worst stocks for the week. It was some 3 weeks ago the material stocks had a big short squeeze, and then a couple weeks ago they pulled back. This week they made it on the upside again. A couple of the biggest movers, Cliff, CLF, and Valet, VALE, up about 18%. The big surprise is, to me, is U.S. Steel, that is X, which has had another 12% move on the upside this week. Full disclosure, I'm short U.S. Steel and expecting that it has been in an area where it would turn down again. Take a look at that chart in U.S. Steel. You can see the weekly chart here as it's come up to this resistance zone, really long in the tooth in that green zone. I would expect it to be turning down again soon. You could see in here the support down around 13, trading now up at 1644, as it made a high up around 17. Take a look at the daily chart. You can see we've been looking for this thing to roll over in this red zone, and it kind of crept above it. Have the shooting star in here a couple days ago. We're looking for a week or week and a half on the downside in here, down to about $13. So I think U.S. Steel is really come too far. Take a look at Lulu, L-U-L-U, Lululemon, and wrong chart there, L-U-L-U, there it comes. And we will take a look at this big upside move here. You could see on the weekly, we were looking for that move to come in about 2 weeks. It came early for us. Sometimes that happens on a very bullish pattern, as the stock is very likely to threaten that high through that to a new high of about 70. Earnings big beat, CEO very optimistic, very, very bullish pattern in there, and we want to buy the stock on a dip. Where's the spot we'd buy it? Well, it would be somewhere around that 13-day moving average, that blue line coming up, or this breakout level here. So we'll call it about 64 to 65. If we get a pullback, that would be our long side entry on the stock. CCL, that's kind of a cruise line. They reported a pretty good beat. Royal Caribbean went up with it, and I don't love either of these patterns. CCL is a better pattern, but you can see in here that the way this pattern looks, this declining little cycle right there pushed down very hard. You see that? And now we're in this kind of an intermediate bouncing period right there. We expect it to turn down in here, so somewhere around 83, 84 should be a pretty good resistance area in there. Want to talk about Regeneron. Regeneron is up about 12%. That stock in a favorable pattern for the very little short term, but intermediate term looks horrible on it. And they had a good drug test, and that's why the stock moved to the upside. We don't like that group at all in the biotechs. There's a ton of risk in there. Virgin America, talked about that one last week. They had a big gain, and then again this week they had another 11% move on the upside. They put themselves up for sale, it appears, and there's been some talk of buyout talks, and not exactly sure who that's with, but that stock has come up a huge way and now is at a big resistance area. I got a feeling a buyout is priced in that one, and I would be more concerned about that one getting a pullback. Love the company, love their airplanes, and I just think it's gone too far on this speculation that we're hearing. Got to talk about Tesla. Tesla has, everybody was waiting for the Model 3 reveal to come, which came yesterday, and when you saw that, it was pretty hard as a car buyer or a Tesla fan to be disappointed by what came out. Really a very sleek, a great looking car, windshield that goes all the way from the front all the way over the top of the car to the back. Just great lines on a 215 mile range for that car, which at its base 35,000 is pretty astounding. But $35,000 base, you got to wonder if they're going to be able to get many cars out at that price level. And 135,000 people in 24 hours put down $1,000 to reserve the car. That is just astounding that they would get that to happen. Some of those people aren't going to be all that happy because there's a limit to how many can get that $7,500 tax credit. And also, by the time they put some extras in there, I mean, that's going to be a $45,000, $50,000 car. So it's not exactly mass market when you think about that, but it is a great car. Take a look at the Tesla chart. And this pattern in here is suggestive of the fact that, well, maybe it is getting a bit tired. As it gets up into this major zone, you can see it's had a big range in there this week. And it's had a pretty good failure today, up about 3%. It was up a lot more earlier in the day, and it's given that back. We're actually looking for a pullback in this stock, and I'll show you where that is as we look at the shorter term pattern. Now, we didn't quite think it was going to get up to that resistance area. There's a major cycle resistance right there, and it tried to get through it and then rolled over. Here's even a closer look, and we're looking for a pullback in here, but if we get it, we think the stock will go up again somewhere between 226 and 222 in that minor support zone over the next week, and then we think it pops up significantly to the upside again. Actually, you know, it's going to take a lot of cars sold at much higher prices for them to have much profitability in this car. So over the long term, you got to really wonder what the value of this company is. But right now, they're just basking in just super technology and a public out there that is just scrambling to get this car. So good sentiment out there, but we think it's going to be a choppy time for Tesla. We're going to be a buyer under 226 for another pop to the upside. I gotta mention Solar City because that is got a pop of about 10% based on the potentials for this gigafactory, which might have actually a 3-year delay on it. It is supposed to be the largest factory, other than I think a Boeing factory in the world, which is as far as the footprint goes, so pretty amazing. Solar City, massive losses in there, massive losses to continue. We think every rally is a fake. That is the best of the week, and we'll be back with the worst. For the worst of the week, the winner on the downside is a stock that we've been negative on for quite a long period of time. That is Pandora. That stock keeps getting pops, speculation out there, and the stock then erodes once again to the downside. It's been in this stair-step negative pattern that we believe continues all the way out into summer. I wouldn't be surprised to see this stock sub $7 again before you know it. Take a look at this Pandora weekly chart in here, and the news that really affected the stock was that, well, the CEO is leaving, and that the founder is stepping in to run the country to run this company. They probably could step in and run the country too, compared to who we have out there who looks to run the country in this next election. Anyway, I got completely off track on that Freudian slip, and here you see Pandora as it's in this negative stair-step downward cyclical pattern. You could see that. This points to sub $7 on this stock, as there's just way too much competition for this stock out there. We can see in here this negative pattern as this cycle has just simply rolled over. So Pandora looking really crummy. Take a look at Tesoro, TSO. Now, this has been a bad week for oil. Oil pulled back pretty much. You know, this is an odd one because there's kind of a battle between if oil prices are low, do the refiners then do better because of better margins? Or is it that they're kind of stuck with inventory and they got big markdowns coming? That's the battle that's going on. And that's what the markdown potential is what brought these big declines right over here. I've thought that that was completely wrong and that these stocks were going to be better. But right now, Tesoro does not look good. It's failing underneath this 34-week moving average, which was strength for it. You can see all the support for all of that year and a half right there, and now it's rolling over. The pattern in here is suggestive that this rally is over and this corrective period is coming. That goes out into May, and this oil market does look weak again. Take a look here, and this is the shorter term pattern, and this is bad. What's bad about it is that this low right over here, which is the low from this cyclical pattern, broke down. That's suggestive that it's moving down like this, and that we're likely to see it move down to, I don't know, $75 sometime in the next, that looks like a couple of weeks. So this is set up for a bad pattern in here, and I wouldn't be surprised if it at least had another 3, 4, 5 points in the near term on the downside, and then maybe worse than that. So that's a look at Tesoro, and that looks like a breakdown to me. Other stocks in that category, in the energies, the drillers have really started to move to the downside again, especially offshore, with RIG, RIG, and Noble NE both down over 6% on the week. Here's an oddball, though. As oil moves down, you would expect that to be good for the airlines because their biggest input is the cost of oil. However, Deutsche Bank has come out and downgraded a bunch of them. We're going to look at American Airlines and United Airlines. Both of these charts have done some damage, as surprisingly they are turning out to be quite weak. Take a look here at the weekly chart in American, that's AAL, and you can see that it has turned lower in here. So if we were to project the way this looked on a longer term pattern, you could see this pattern in here and the dotted line, how it followed it. Now note the projections in here, and that at some point we're going to project this like this again. That would mean that this rolled over, and you'd probably get down and even test that 36 number sometime out in the summertime. So this is not a good looking pattern. We would expect maybe another week or so on the downside, and then after that moving with an attempted rally. There's a bearish, I see that gap right there, that's a bear kicker pattern, and a negative bearish engulfing right there. That says to me that there's some trouble. Here you see this big down arrow, that's the slim ribbon, giving it negative momentum for the first time in a long period of time. This is where the slim ribbon turned positive momentum here, and you saw that big rally. So now you have American rolling over That's not a good pattern, and we're going to be looking for a place to sell that. Take a look at United Airlines, UAL, also gets a downgrade. You see it gets up right near that resistance where it got up to a couple times before, and it is starting to roll over. This pattern is suggestive of another month moving down. I could see it easily moving down under that $54 to $52 area where that support zone is in there. So we're looking for more downside in United. And take a look at this pattern in here on the daily. There's a gravestone doji right there and that big downside gap on the downgrade. That is a very ugly pattern in here, and we're going to look for the momentum to turn negative here in the next couple of days. And United Airlines, that is a bad looking pattern. One more stock we want to look at here is Deere. Deere is a stock that we have in our positives in our rankings and setups as a potential long-term alongside setup. And this on the daily chart, I'll show you, it's gotten down to some support, broken under some support here on the weekly. We saw Monsanto move down, also corn move down big, and that's because of the crop acreage report, and that really set this stock on the downside. We're going to look for a rebound in here, but I got to tell you, I'm not anywhere near as optimistic I was on this stock back just a few days ago. Now note that it's holding this support zone and giving this what looks like a firefly doji right there, which is a nice look at that support. Now also want you to look at the cyclicality in here, and this is what's keeping us on the long side. Note this pattern right in here, and it found its bottom right where it was supposed to, rallied, and now that little doji finding its bottom where it's supposed to. We're going to look for a rally in here, but we're not going to look for a lot on the upside based on all of this background news. Hopefully it'll be enough to get us into a little profit on the position we have. But overall, that's a lot worse looking pattern than we expected it to, and that crop acreage report can't affect it. The corn pattern has turned quite negative and probably has another several weeks to go there before that bottom is in place. So when the grains don't do well, then the farmers don't have as much money, and then they don't spend it with Deere, and then you get this kind of activity. But the stock falls from 86 all the way down to about 75. Big decline for that stock. We'll look for a rebound. That is the worst of the week. For our emails and tweets, had lots of great emails, of course, this week. Lots of commentary on a lot of our member videos. And this week, we're just going to bring a few of the questions about charts. Some of our things that went right, and some of the things that didn't go so right. So some great stuff here to look at. Terry C. writes me and says, last week you profiled Nike, and he says the recent issue for Nike is that, well, they lost Stephen Curry. And they heard estimates that that's going to cost like $1 billion in marketing. And that Del Curry, his dad, came out and said Nike basically blew it with sloppy presentation, and it said that insulted the Currys. Oh, so sorry. And this was not only bad for Nike, but as he says, a major coup for UA. Under Armour. Let's take a look at those charts as we look at Nike. Take a look why I didn't like it, and at Under Armour, which happens to be a stock that has a really good pattern. Take a look here as we switch over to the charts, and you can see here Nike NKE is the first one we're going to look at, and you'll see on the left is my weekly chart and on the right is my daily chart. We're going to blow up this weekly chart for you to see, and note in here this beautiful stair-step upward move. Whenever you see green yellow, that's a stock that has been in a beautiful long-term uptrend, and it's very clear in there. And now you could see we've been in this green rally zone right at that point, but something is changing in here. You'll note that each of these green rally zones that you can see made it to new highs. Each of those, beautiful, right? This one is not going to a new high, as you can see right there. And as we switch over to the daily chart in there, you can see that Let's move closer in so you can see our cyclical patterns in here. First thing we want to note, what we did last week, is there's this big bear kicker. That's that big downside gap on that news. And get down to minor support. So some buying coming in right over here, you can see. And then when you look here, there's this, well, we'll call it a bear rectangle forming in here, and expecting this to move on the downside again. So this is a look at Nike and what is a very, very bad chart, and we think this thing is going to get hit hard on the downside in here in Nike. So let's switch over from Nike to Under Armour UA and take a look at that. And you'll see in here that, well, this one has been moving up on the weekly chart, getting up to some resistance and kind of stalling right there. But if you look right over here, you could see this is a nice looking rising wedge pattern, and it could break out of this and get up through the resistance zone. So Under Armour, this is a very, very nice pattern in there. So we actually put this very much on the positive side when we look at that and say Under Armour is a stock we want to be on the long side of. So Nike, yes, we'll call it big misstep as far as that goes. Talking about missteps, next two are from viewers that are talking about setups that we put up on our rankings and setups that look like missteps. Numbskull. Okay, so Guna writes to me, sends me some great emails and says, your opinion on Visa. She says, currently you have this as a negative setup. And she says, it's been strong and broke up through resistance. Is this still a good entry on the short side? And I say to that, let's take a look. And here is the next chart in Visa. So Visa looks at this resistance here. That's what we've been looking at as it comes up, and it actually hit a little resistance right over here that it moved through. What we didn't like about it was this big give up in here, and it says that it's likely not to be able to get up through the resistances up here. Now it's been in this rising zone, this rising phase that you could see, but it is up over here. I'll tell you what I don't like about it, and we have removed this now as a negative setup waiting, and that is this upside momentum is just accelerating up here, and what we want to do is now wait. I've added a new look at one of our studies in the bottom here, and you could see that this is the projection oscillator, and this isn't even able to get to the oversold area. Slim ribbon just powering on the upside here, and you could see you can't keep this stock down. It keeps going up. So we have removed Visa, and I would say that stock, we're not going to be short it right now. We're just going to wait and look for another entry when the stock tells us that this upward momentum is over. So for that one, we missed on that one.
They missed me.
So now Madhur writes me about Google and says, Google has blown through 2 resistance zones. Please explain why you still have this as a negative setup. Well, I got to tell you that Google looks to us like it has a massive top forming. Now, this is very unusual for us to be holding something that has been going up when we expect it to turn down in some significant way. Usually we get out of the way of it and not even have it listed as a potential setup until it gets very clear again. This one has got such a bad pattern on it that we have stayed with it, and I think longer than we normally would. We still think it is a bad looking one, and I will show you why. Here we'll switch over to the Google chart. First thing we'll look at is that weekly chart in Google, and what you'll see in here when we look at it is what looks like a big diamond top forming. I'll get a little closer look at this on these cycle patterns for you to see, and I can draw the diamond in for you. First thing to note in here, what really has us negative is this rising phase or double rising phase is right in here, and it had this big negative downside reversal and took out this low. stops right on the button on support, but then goes into this flag, bear flag moving up. This points to some bigger decline coming right in over here into the May period. Now you can see the big diamond that's forming in here. That looks like this and this. That's that broadening pattern, and then this pattern right in here that you can see is that big diamond. When you get big diamond patterns like this, the odds are pretty high that it's a major top. So we had expected this flag to have turned down already, but it has been creeping on the upside. Take a look at here on the daily chart. You can see that upside rising flag, and there are those two resistance zones that the stock has continued to get up through. Now take a look at where we are right now. You're going to see a gravestone doji right in here. You can see that right there. That is a problem. And that says this is going to be the resistance zone. That makes sense that it's going to move on the downside. First support is down around here at 740. It's not very far for this stock, about 25 points. Truth is that we think that this major top is going to be significant and that Google is going to move on the downside in a significant way. So that is another one that on our rankings and setups hasn't gone so well. However, overall, we have a fantastic result and I'm going to show that to you next week when we talk about our first 100 setups and rankings and setups. So on a happier note, I get an email from Lynn K. Says to me, thanks for the Costco setup, COST. She says it was great. And I'm going to show you that one, COST, on the weekly chart, and you can see what we saw. And first thing we'll take a look at, again, is the weekly chart in Costco. And here, got to get that weekly up for you to see. And here we go. And you can see we have been in this rising phase in Costco. And that's that green zone that you could see in there. And it gave you that nice cyclical rally. Gets up, by the way, just up to that resistance zone. And the question is it starting to roll over yet? So actually, we've taken our profits in Costco in this rally. And I want to show you the daily chart. You can see what we saw, and that was that upward weekly pattern, and then the bull flag that formed in here right in that little support, and then it pops big on the upside, and then it gives what looks like a gravestone doji right over here. Not quite, but a shooting star, and it looks like this area, we'll call it 159, 160, is a problem for it. We'd look for it to pull back into this support area over here, but this is such a powerful pattern that we wouldn't put any short side trades in there. So that is a much better look at something that worked really well. Lynn, thanks for writing on that. So that does end it on a happier note, and stay tuned for something special. All right, this is our short-term view of the coming week. Before we get into the charts, don't forget we've got this huge amount of great offerings here at the askSlim website. Make sure you go in and look at it. Go to membership and you'll see all of our different offerings. If you just want to see our videos, 7 different categories, $33 a month for everything that we do. That includes our Future Speak on Wednesday, an hour-long show looking at 25 different futures contracts. So you really want to get that. You can't beat that. Our rankings and setups are level 3, where we have this great run going. I don't know if it's a run or something that's long-term, but I'm going to bring next week the results of our first 100 setups, which have been astounding as far as opportunities for traders. And then all of the charts you see, you can get that in level 4. So go to membership and take a peek. All right, short-term view. This is when I look at only daily charts. We look at the setups for the next, say, 4 to 7 days, and then take an accounting of how I did in the previous week. 2 weeks ago, I was an astounding 90% plus. It was just like bullseyes everywhere. This week, not so much. It was about 60%. We'll call light crude, gold, and the euro pretty much spot on. The bond market we did not get right. We expected it to have a down week and test recent lows before moving to the upside, so we didn't get that test. We're still looking for a little more of a test. S&P 500, we thought we would get a bigger dip and then move up again past the 2050. The dip didn't come, and we moved up well through 2050. I could take partial credit for that one, but I'm not, because the dip really didn't come to the levels that we expected, and this market is super strong. For the VIX, we expected it to continue on the downside, and there is more of that to come, and I'll show you that in a moment. Let's take a look at these short-term charts, and we'll get a peek at what we expect to happen in the coming week. First thing we're going to look at is light crude, and here is that chart. So and there is the light crude on the daily chart. I want to make just a couple of notes in here that we, if you look way back here in last December, we saw a negative pattern occur, and we were looking for a breakdown that would keep the market moving down, and then we saw the low extending out. We had all those notes in there. We were looking for mid to early February as the low, and you could see it actually came exactly as we expected right over here, and then got into the better period. We projected to up to $45 in oil for the week, for the year, and we still think it's going to get there at some point, but probably much later in the year. Now, we have a rolling over that's going on the intermediate term, and we believe we're in a corrective period. We had to move all the way up over 42. Now it's pulled all the way back under 37. $5, pretty good downside move into this short-term support zone. So the way this pattern sets up is that there is still more time in what we think is the first leg of this corrective period that we're in. So in other words, we think that there's more to come after some bounces. We'll talk about the bounces next week, because this week we expect to see oil still moving to the downside. You can see these patterns pushing down right over here. That says we're likely to get a test of the bottom of the support zone in the next week. We're going to call this a choppy down week still for oil, getting down under the 36 number, maybe a little bit under that. And then after that, in the following week, we're going to look for a rally that bounces, and that would be a sells area when that happens over there. So we think that this week is still going to be a struggle for the oil market, and that it's likely to get under the 36 number. Next one we're going to look at is gold /GC. Last week, what we said for gold was that we expected bounces to come and fail. We have a lot of cycle patterns on there on the bottom. So those of you that are familiar with our cycle brackets and how that helps us, you'll understand them. People that are new, well, it's going to take a little time when you see this busy of a chart to understand it. But essentially what we saw was this declining gold pattern right in here, this one right in here, that we thought was going to push gold on the downside, and that if it had a rally, it would fail. There's that Yellen rally right there, and you could see it rolled over. So what this looks like to us is there's only a couple of more down days in this dip right over here. We expect that, early part of the week it could get down and test near the 1200 level, maybe 1205. And then after that, these are going to start to move up again right in here. Now, silver is in a different pattern, and it's a lot weaker. And so we think that while this gold bounce comes in here that we expect, if silver bounces, you can see this pattern in here, that could set up for a pretty good short sale in silver. So we're going to look for bounces in silver to sell. Gold, not quite as much, because what we see in here is that, yeah, like I said, a couple more down days potential, but then moving back to the upside. You see that line there? That's the neckline. I don't think it's going to get up that high to test that neckline after this, but we'll see. Again, when that happens, then this pattern will take over on the downside for the next leg. Ultimately, on the intermediate term, we're looking for about 1180. Those are not very low prices, and you could see it's just really a downward chop of some mild proportion that we're looking for here in the gold market. We'll call gold for this week, down just a little bit early and then a bounce. It's probably going to be a narrow week. We called last week a small change, and it's like up $2 or $3 right now. So that one was pretty much right on for what we're looking for in the gold market. And we've got some emails and some tweets telling us people that took advantage of what we said here, and celebrating the fact that this is a free show. So good for you if you did well on it. Next one we're going to look at as we switch over, let's stay on the daily chart, and that would be /6E, the euro currency. So we were looking for the euro currency to get a bounce. Let's maximize this so that you can see. And the pattern that we were looking at was this pattern right in here. It came down, and then we thought it was making a low on the supports, and we thought it would go up. We thought it would get up to between 112.70 and 113. The weaker dollar actually had to do better than that. So where are we now? Well, we think that the dollar is within a couple of days of making a temporary bottom. Therefore, the euro, we believe, is within a couple of days of making a temporary top. You can see this pattern in here as these two patterns start to come on the downside. We are expecting the euro to move to the downside. We're going to call it a down week. In the next 2 weeks, now this is 2 weeks worth of time, from where we're trading right here today to where this low is over here, maybe it's a week and a half, we expect it to get down to about 112.36. That's that short-term support right over there. So this is a pretty good trade potential in here of a couple of pennies in the euro currency over this next, we'll call it week and a half. We think it's going to give ground, and we're going to call it a downside week. So we got the bond market wrong this week. We did not expect Janet Yellen to be as dovish as she was, and we did expect to see the bond market move to the downside. We thought that this period in here, where you have 1, 2, 3 cycles pushing down, was going to get a correction somewhere near these lows in here in the high, low 128s, right over there, and then move to the upside. However, the interest rates falling as Janet Yellen's comments came has been, got through this short-term resistance that we've had in here. We still think it's going to roll over. Now, only for a small amount. We're going to call this a small down week in the bond market coming. And then after that, we're going to get into a period where there's about 3 weeks, we'll call it 2 to 3 weeks, where there could be a pretty good upside move. So this is what we're looking for. Small downside move in the bond market, and then move to the upside. We'll just call this a very small chop to the downside, of which I won't play the short side because the intermediate term just looks too strong, and then looking for the buy to occur. It might be only down to this slim ribbon that you can see right over here, with that buy coming in right around 129.16 or so. So we're not looking for a lot on the downside. Maybe it tests this low right over here around 128.20 if it decides to get a little more pressure down there. But again, this a few days that we expect on the downside, I think is really going to be much more of a buying opportunity. So let's talk about the stock market. The stock market is a monster. What we started to switch to in the last couple of weeks when we saw these patterns shaping up is believing that the intermediate term is, well, much more bullish than we had originally given it credit for, thinking that the big correction that we saw and came just as we expected into February, into mid-February or so, that it was going to have another leg on the downside and test the lows before we got into the next much more favorable period. That changed, and now we've gotten into this bullish stair-step upward move that can only happen really in a very positive intermediate pattern. So we changed. We were looking for a minor dip to the downside to around 2010, and then expecting it to move after that back through 2053. That downside move did not come anywhere near as strong as we had expected. Let's take a look here at the short-term pattern in the S&P 500. So we had thought that it had actually peaked right over here. This is the Janet Yellen move right over here, that day right there. It came down again into that support zone. It only made a low right in there around 20 2027 or so, and then it then took off on the upside again. So we have that 13-day high right there, and it actually is close to making the 15-day high right here. You can see what happened in the last cycle. It made the 15-day high over here. It had a couple of down days right there and then moved strongly up again. We think that's where we are right now. We could waffle a little bit early part of the week. If it came down to the minor support, it would be right now down to about 2033. That's about 37 points. We're not really calling for that. It could happen. I think if it did, it would be a buy, because the window for a correction is really just slamming shut on it here. As we're getting to the end of this period right here, it's likely, if it waffles around in here at all, then to take up to the upside again. I did honestly never thought I'd be saying this, but when I slide this down and look at these resistances up here, we've moved through this 78% fib confluence and done it really rather easily. The next resistances are up at these cycle highs right around 2116 and the old high at 2134. I don't see any reason why they're not going to go there. This is just a super strong pattern. At some point, they're going to put on a failing pattern in here, and we're going to get into that intermediate correction. And then we'll be able to measure how far on the downside it's going to go. But at this point, we have nothing to measure off of because it keeps making new highs, and the pattern is extraordinarily bullish. So we have really, in our rankings and setups, started to weight more of our setups to the long side, quite a number of them recently. And that's why, because this pattern is so bullish. And we expect just backing and filling and then continually moving up. I have no reason not to believe it's going to make an all-time high in here. And it's just the way the pattern is setting up, and it's been bullish. Again, I think if we get some downside, you can see what's been happening. It doesn't last long. The buyers continue to come in. That's the phase that we're in. Let's take a look quickly at the VIX. Last week, I said that I thought that the VIX would continue to churn its way down, get below 14 in the next couple weeks. It actually got well below 14 already. I want you to see this pattern in here because it is monstrously consistent. And you can see, let's just look at this portion right in here. This points to around mid-April, before the decline in implied volatilities ends on this pattern. So that points to about 2 more strong weeks in the S&P 500, and that is a good way to measure where you expect where the top could come in this market before you get into any kind of a significant decline. Now, again, I want to switch over to the weekly pattern in the VIX because it's so significant, and that is, if you look at this 2-week period where the VIX could go down, here's the 2-week period right over here that lines up for low implied volatilities. After that, we point to a period where implied volatilities spike again on the upside. Look at each of these bullish periods right in here where the cycles turned up, and each of them brought you these big upward spikes in implied volatility, and that's what we're going to get into here. That comes in starting around mid-April and is a pretty good indication of the fact that the stock market rally that we're in right now is likely to keep going until mid-April. After that, I think we get into our bigger corrective process again, and then we get some pretty sizable declines. I'm going to call from that peak to the next correction down over 100 points in the S&Ps. That's far less of a downside move than I had originally expected, and it's much more a bullish pattern, but still 2 more weeks, and then we'll take a look at it again and see if that top is setting up. That is it for Market Week this week. I hope you have enjoyed it, had some fun stuff in there, and also some really interesting stuff as far as the analysis goes. I want you to make money in the coming week because it's our goal to raise your probability of success. You have a great weekend, have a great week, and I am always wishing you great trading.
Well, I'm going to the city and I'm gonna do a silly show.